So my opinion on that is, for someone that back in 2021 suggested to people selling virtually all equities not related to commodities and all bonds other than T-bills, I have not yet seen it worth yet plowing money back into the bond market. If I was, it would be when I believe, even though it's not certain it's going to happen, but I believe we will see both the 10 and 30-year-old well over 5%. And so I don't think it's yet time to commit a lot of capital there.
Think. Act. And prosper. You are now tuned into the Money Level Show.
All right. Hey, Peter, how you doing today?
Always a pleasure to be back with you, my friend.
Yep, the Lord's mercies are made new every day, huh?
Yes, sir.
That's good. That's good. I wanted to bring you on just to get an update just on the markets. Currently, we're in like a weird environment. You know, we have the Fed still tightening. We have fiscal still spending out of control. And I don't see it, our deficits or our debt going any lower anytime soon. There's a lot of talk about the bond market. Bonds have been getting killed, massacred, and some people are seeing that as an investment opportunity, while others are saying that we've been in a 40-year decline in interest rate environment, and this is not the time to buy bonds. So it's not going to be like the last previous years. So what's your take on bonds and where we're at in the economy?
Well, I find it intriguing that when I started back in the business in the early 80s, we had less than $1 trillion in debt. We actually had about 800 billion. And now our interest expense alone in the US is more than that. It's inconceivable for me to think that. We never imagined things in trillions, let alone 33 trillion in debt. But where the real issue is coming now, and why I don't think we're going to see what I like to call the don't worry, be happy wish of 2% interest rates again and 2% inflation, is because the needs now of how much money we need to borrow at a time when a lot of people who used to be willing to give us their money, particularly at low rates, are not there anymore. And it's getting crowded now in terms of a lot of people seeking to get money, but very few willing to part with it. Certainly at not at the rates that we had only just seen a year or two ago. So my opinion on that is, for someone that back in 2021 suggested to people selling virtually all equities not related to commodities and all bonds other than T-bills, I have not yet seen it worth yet plowing money back into the bond market. If I was, it would be when I believe, even though it's not certain it's going to happen, but I believe we will see both the 10 and 30-year-old well over 5%. And so I don't think it's yet time to commit a lot of capital there. And let's not forget something. In a few weeks' time, with everything else that's happening, wars and all, our great Congress will once again meet to supposedly do something about the debt ceiling, which, remember, was pushed off earlier this year, at a time when we need to borrow up to $1.7 trillion in the next few months, at a time when even same people in the same party in Congress aren't talking to each other, let alone the party. So, yeah, I just don't see any advantageous reason why you should have to run back to the bond market anytime soon.
Where would you see, where would interest rates need to be for that to be an attractive investment for you? And so say, like, obviously there's risk of government default and, things of that nature, with the huge amounts of debt, the huge amounts of deficits, and the government's promising to pay you back when they're already broke, right? And so, like, where would interest rates need to be? And if interest rates were higher on the 10 and the 20-year or 30-year, say they're 10% or whatever, would you still consider this? Would you consider that to be attractive investment with the current levels of debt and deficits?
Hey everyone, sorry for the break in action, but I have to let you know that I am now an affiliate with Miles Franklin. Miles Franklin has been a bullion dealer for over 30 years, and they provide some of the highest quality service to their clients as well as fair pricing on bullion products. So purchasing bullion through Miles Franklin not only stores wealth for yourself, but you're also supporting this channel to continue to provide free educational material for retail investors and those who may not be aware of many financial concepts that I discuss on this channel. So you can get started by sending an email to info@milesfranklin.com or calling 952-929-7006. Be sure to let them know that Daryl Thomas or the Money Level Show sent you, and I will receive credit for your service. I thank you all for considering this. Now let's get back to the interview.
Well, right now, I just think T-bills, for 1 to 2 year spans at 5% are fairly decent. I certainly think they've become competition to the stock market when the stock market did not have competition from bonds for a lot of years. That's a big change. I think the other coin to flip is look what's happening to the person that has to borrow. Look at interest rates now for consumers. Some of the less than high worthy credit cards are up between 24 and 30%. Now, I got to tell you something. When I was a young man, that's what loan sharks charged, and we made fun of that. Now, once you're paying 24 or 30%, you can't get even. That's the whole part, especially if you start making minimum payments and all. And so, I think that's as big of an issue now of what people now have to, how much more costs it are on mortgages, car loans, every conceivable area. And there's no reason, I think, to suggest that in a matter of just a few months to see interest rates lower. At best, they may plateau. I still think that plateau is going to happen above 5%. And depending on how certain things happen with wars and more of the BRIC nations and the dollar and all that kind of stuff. And that's, by the way, and I don't want to switch topics on you, but it is important to put this in context on what we're talking about. It's one of the reasons why gold has done better than most people expected, because some people now have been using gold as a hedge versus T-bonds. Remember, you've been around long enough to remember when there was wars and stuff breaking out, the bond market would rally strongly, money would flow in. We didn't see that this time, and that's why we're seeing it being offset somewhat by physical demand for bullion.
Mm-hmm. So it sounds like there's more to factor in than just the rate that the bonds are paying. I mean, when you have wars breaking out, and it seems like the risks are a lot greater. So it's better to be in a short term government instrument rather than a long term locking your money away for 10 to 30 years.
Sure, absolutely. I mean, what I don't have personal fear, my personal fear should mean that should fit into everybody else's, but I don't have a problem that if I go on a 1 year T-bill now at 5%, that I'm going to miss out. A year from now, it's going to be back at 2%. And I could have locked in 5 for 30 years. I don't have that fear because too much demand for money is going to be needed by this government at a time when, you want to start getting involved in wars. You want to start getting involved with it's hard for me to still say this in my 40th year, multi-trillion-dollar deficits, not debt, just 1 year deficits. It's asinine. And, I bring this subject up because it's important, my friend. Congressional Budget Office. If there's anything left that's close to bipartisanship, it's them. Earlier this year, they issued a report that in less than 10 years, we're going to be at $50 trillion the way the borrowing's going. It's my understanding now that they have made discussions as little as 6 or 7 years because of how much exponentially and borrowing has increased now. That's all within our lifetime, even old guys like me. I mean, most of us are still going to be around if and when we get to that point. And, when you start talking about 40 or 50 trillion in debt, you start putting a 4 or 5% interest rate on that, you're starting to talk about half of all taxation money that we take in will just go to interest expense. It can't go on. It's inconceivable for that to continue. And I still see almost pure complacency among the financial service industry, the financial media that's tied to their hips, and of course the investor community.
Mm-hmm. Yeah, that's very concerning. So what does this mean for like 60/40 bonds? Like with foreigners not buying as much government debt, many people that have been picking that up is the the average citizen. The Fed's not buying it. I imagine retirement funds, pensions are having to absorb some of that. What does this mean for 60/40?
Well, an interesting thing came out last week that I think is also important to bring in this mention as we're talking about this topic. The overnight repo, where institutions basically park money with the Fed, which has been paying over 5% for them recently. Last December was at $2.1 trillion in it. The other day it went below or just right at $1 trillion. It's now lower, and that money, by the way, is usually parked there because it's going to go into government securities. That's why it's there. It's now lower than what we actually know we need to borrow in the next few months. I think that's a very big concern, and I think it's one of the negatives, major negatives, overhanging the credit market. Because let's not forget, you and I are talking about supposedly the best rated type of bonds. We haven't begun to talk about corporate bonds, the zombie companies that were financed by the Fed when the pandemic hit, real estate groups, all looking to need to come back to the market now and borrow money. And they're not going to be able to borrow at 4 and 5%. They're going to have to offer out much higher interest rates in order to raise capital. So the whole flipping of a few years ago when we were talking about, remember we were talking about negative interest rates? It's hard to imagine. That was just a couple of years ago. And now we're talking about where companies and countries could have difficulty financing.
Mm-hmm. Yeah, that sounds concerning again as well. I was wondering, so with the reverse repo market, so that money, which I didn't really understand what it was used for, and I'm glad you shared that. So that money there is used to is parked there to go into government to finance government debt.
Yeah, financial institutions. Basically, that's where they use it. They park it. I like to call it their money market fund. To decide where it's going to go, and that doesn't get a lot of coverage, but it was an important piece that came out. And like I said, think about this: the people who are going to make these decisions are fighting among themselves, let alone not against the other parties. And that's why I just say it's just adding up, and we have concerns about the health of a president and the ability to function. We have a guy who's running against him, who's going to trial, and the political landscape. If you think about it, no matter what party you're rooting for, or against, when you combine that with the social and economics of happening in America, it's why I said a couple of years ago that I felt we entered the worst period ever. And to me, it just seems to be getting worse. There's nothing on the horizon to say, hey, all right, we're finally doing something correct. We just keep getting ourselves in mistakes. Here, we had a president that a couple of years ago said, no, the Trump is going to get us into war with Iran, and so we're going to appease, in a sense. We're going to release this money. We're going to overlook the sanctions that Trump brought in that. And now he just went into Congress, and I probably wasn't reporting as you and I taped this video, that he's gone to the Senate looking to have for the War Powers Act. He's telling the Senate that he's invoking the War Powers Act. It's. You and I, if you don't mind, we could say it on air. We're both strong Christians. You want to have faith. That God is in control. But I see all aspects, social, political, and economic, being lost control here in the United States, and that just doesn't bode well for financial markets, in my opinion.
Yeah. Recently, we had Biden. I think he asked for $106 billion to fund Ukraine and Israel during this time. And what's interesting is I remember when learning more about when Bush, the second Bush, was in office, and how he was granted a lot of power to be able to essentially do whatever he felt was in the best interest of the country. And it was that act that Biden's trying to enact. Was that from the War Powers Act? Is that has that been around for a long time? I'm sorry.
It's been around, and it's supposed to prevent, a president just, going haywire or so forth. And, but like I said, this is a tinderbox in the Middle East. It can really expand very fast. I think Ukraine has become an afterthought. I really don't see how it can continue to expect to be funded from the Western countries as it was. I think Russia recognizes that. I think it's in their best interest to drag things out there. I think sooner rather than later, there'll be an overture of some sort of settlement, because I don't think us or other countries can just keep writing blank checks at a time when all these other issues are happening. And so it really poses some really big concerns. And again, I think it helps explain, and I don't want to flip-flop from where you might want to head, but it also helps explain and why I believe the BRIC movement is so important, because the United States is losing prominence economically, socially, and politically as each day goes by in the world. And that prominence that it once had helped them be the spender that they were, because, the dollar was the only thing known. No one ever imagined Saudi doing anything other than a petrodollar. Now all those things are changing at the worst possible time for America. And I have to tell you truthfully, other than people like yourself that are independent media voices, the general financial media doesn't discuss this. And I really believe most financial advisors have no real idea what that all means and what it could lead to.
Mm-hmm. Yeah. I was learning, about the oil embargo back in the 70s when Israel had a conflict during that time, and we came in and supported Israel, and I think I don't know if Saudi Arabia was tied to that or what, but then we had multiple other nations, in the Middle East, decide not to export oil to us. And then we saw the oil prices go extremely high and such. And so it seems like that's a huge risk again for this in this particular conflict, as well as, Saudi Arabia joining the BRICS and such. And so like it seems like the risk for oil spiking or going higher is more prominent now.
Yeah, that's legitimate, but it's important to note, I believe, in my analysis, Saudi Arabia is no fan of Iran. If it sooner want to deal with the United States than Iran. In fact, they've become so concerned how Iran was moving towards a nuclear bomb that they were supportive, even willing to go make peace with Israel. And basically said that they themselves may want to develop one because of the feuding that has gone on with Iran for a while. Iran isn't a very popular group. It funds, obviously, terrorist and militant type of factions that are in some of the countries. But by and large, most of the Middle East, that's why people forget at one time Israel was feuding very big with Egypt, but has gotten along very well. Same thing with Jordan. And other countries. And while Trump was in power, that was starting to happen with these other countries. And now, of course, this whole situation and the Monday morning quarterback will be that Iran recognized that. That's why they caused this, because they didn't want to see Israel and Saudi Arabia come together. But at the end of the day, the actions that they took in order to see that happen were as atrocious as anything that's happened in modern times. And so, unfortunately, I don't think this is going to fall back into old status quo. They do some beating, they come back, they have settlements, ceasefires. This time, I don't think that's going to be the case. That's why I think things have to get worse before they can possibly get better.
Hello everyone, sorry for the break in action, but I want to tell you about the link in my description below. This is to the New Orleans Investment Conference. This conference has been around for years and have brought many people out, such as Milton Friedman, Gerald Ford, Alan Greenspan, and Margaret Thatcher. This conference is put on by Brian Lundeen and his team. Brian is the CEO of Gold Newsletter. This year, they're going to have speakers such as Jim Rickards, George Gammon, Peter Schiff, Rick Rule, Danielle DiMartino Booth, Lynn Alden, and many others. Now, I encourage you to click the link in the description below. You can choose to attend the live event, which I will likely be at. as well as the event that is live streamed. You can support the channel by using my link below, so I encourage you to check that out. Now let's get back to the interview.
Yeah, and for me, you know, only been, you know, on this journey for about 3 years. It just it seems very just very stunning, just like how much conflicts are popping up, you know, and everything. And I know Ray Dalio talks about we went through a lot of years of peace, you know, and now, you know, it just seems like, you know, you got the pandemic, you got Russia, Ukraine, you got, you know, Israel, Hamas, you got the BRICS forming, you know, it's all these different conflicts brewing up, you know, and is this normal in markets, or is this like just where we're
Well,
at in in the
let's
cycle?
we'll put on our secular hat first. And
Yep.
listen, there's been conflict. You know, we had two atrocious, terrible world wars. You know, millions of lives were impacted, lost, what have you. We've had conflict since Eve said it was okay to take a bite of the apple, and you know, so those type of things are around. I think one of the reasons also is we see so much more now because of how worldly and mediums like the internet and all that past generations, you know, I was told, I remember from people 20, 30 years ago, I spoke to that were, you know, growing up during World War II, you know, other than a newsreel or a newspaper, that was basically what they knew. They kind of went on with their lives. Now you can be on the internet. You're seeing somebody's video right from Gaza, you know, and you know, so it's a different aspect. But you're right; these things are acute, and they're coming at a time when, you know, listen, we were the world's largest credited nation when I started working in this business 40 years ago. We're not that now. And, you know, when you're not financially stable and solid and you have a lot of issues and a lot of outstanding expectations people have for you, like, you know, like you said, 100 billion here, give 100 billion. And we have a problem that I don't really realize how people don't realize how acute it is, at least some don't, is our immigration problem. You know, we're having millions and millions of people. Think of these poor souls. And if we may, let's put on our Christian hat for a minute. I have nothing against the people trying to come here. If I was in a country where it was just so atrocious and inconceivable, and that's why they're coming, because they're coming with nothing. And a friend of mine, or I hear, goes to this place where it doesn't sound like much to us, but somebody feeds you and gives you some dwelling and all. I try to walk 1,000 miles to get there myself. And so what's not being discussed is we're not talking about setting the change to stop the spigot of why more and more people are just going to keep coming. And this immigration problem is not just to the United States. It's happening in Europe as well, and all, with people leaving countries, and you have that ability to do that now where you didn't have that before. The immigration thing is a huge issue that's not getting addressed, and only now, because it moved from a couple of states where they were suffering to biggest cities in New York City now, you know, at the point where they're offering to pay the people a ticket to fly some other place. I mean, this is an issue that we haven't begun to see the cause and effect and how much impact negatively it's going to have, other than, unfortunately, to the people right in those remote areas, on how it's going to impact us for a much longer time. Because remember, most of these people are coming with nothing. And so they are going to be types of people that are going to look for assistance somewheres at a time when it's becoming harder and harder, and fewer people pulling the wagon. More people are getting in the wagon. And so those of us that are left are asked to pull harder and contribute more at a time when it's even becoming tough for us. Listen, 65% of Americans are working paycheck to paycheck. You can't start asking people like that to suddenly come up with 20 or 30% more, or take more 20, 30% out what they already have. They'll end up in the wagon. And that's the big issues that we're facing right now.
Yeah, that's true. So what era in your career would you you consider the golden era of the amount of years that you've been in this field? What would you consider the golden era? And how does that era differ from what we're seeing today?
You know, it's funny you say that. I said this to somebody and is a strong Republican. I think he cut me off his Christmas card list after I said this. But when Clinton was president, Clinton, with the help of the Republicans, balanced the budget. We've actually had 1 or 2 times budgeting. The 90s was a pretty good era. I mean, there were a lot of good things happening. Technologies were just breaking out that were changing. We were starting, cell phones, the internet, the upside to the internet was taking hold and so forth and so on. But I have to tell you, we still don't have a society here that understands how we run economically. And because of that, they don't understand of what issues are going to hit them because of all these things, the debt, living beyond our means. I still meet families. At one time, it was a lot of athletes, and I meet people from working class to affluent, and at all levels, they're all at least one level above where they really should be spending wise versus income. We just saw that in the most recent income versus consumer spending last week. Consumer spending was 7/10%. Income was 3/10. Now, you don't have to be a rocket scientist. If you spend $7 and you only earn $3, how do you make up the difference between the 3 to the 7? We borrow. And so we borrow, we take away from things that we should be doing for the future, retirement and so forth. And it's becoming acute now. And I don't think most Americans, and I have to say a lot of financial advisors, don't understand of how difficult it's become and how quickly that could override us and really put us in a very tough position. And I think my opinion is once the BRIC nations really get going and they offer out an alternative, I don't think they're going to look to replace the dollar, but I do think they're going to come up with something that at least they're going to use between themselves and therefore not use the dollar. And when those dollars have to come back to this country, the inflation tied with a weaker economy and high interest rates is going to cause the toughest period for America. And I don't think we're that many years away from that, sadly.
Mm-hmm. Yeah. And that brings me back to to thinking about the importance of gold and gold being an asset that's not the liability of someone else's. And so, the importance of gold, especially in that type of environment, obviously, if, you have hyperinflation or just inflation, gold is held up really well. And, obviously, we have to talk about the central bank digital currencies and things of that nature. And so it seems like people should be really looking at owning assets that are not tied to, they're not the liability of someone else's and should also, hedge their risk against, a currency collapse.
So I don't sell anything gold. I don't sell anything related to gold. I don't represent any group or thing of that nature. But this is when I sit down with a planning group. And if you came now with your wife, your kid, and we were talking, and I would say to you, okay, do you have home insurance? You go, of course I do. And why do you have the home insurance? Well, in case something happens to my home, I want to be offset. You have car insurance? Of course I have car insurance. You have medical insurance? Of course I do. What's your biggest asset? And for most people, it's a financial asset. And I say to them, okay, what do you have as insurance against that? Or what kind of insurance am I supposed to buy? And then I explain that's where gold comes. And I tell them, and I get this reaction all the time. I said, I think you should consider some physical gold ownership, or at least something that has significance, not mining shares, but actually the hard asset itself. And then pray to God it doesn't go up. And they always pause and they always go, excuse me, Ms. Grant, do you want me to buy something that's not going to go up? Yes. Why would you want me to do that? Because if it goes up a lot, I can tell you that chances are your financial assets went down and you need something to offset it. And quite frankly, I also believe it's a worthy capital appreciation opportunity as well. But I think for the first reason, you should have it as insurance. And it's worked for a couple of thousand years. And I know when I sit with 25-year-olds and 30-year-olds, they start telling me how, Mr. Grandich, you're a dinosaur, cryptocurrencies, the new gold, and all of that. And I said, listen, while the people who still have the wealth, which is the central banks, the wealthy, they're still buying gold far more than they're buying cryptocurrency. When that starts to change, and whatever left of the cryptocurrency market, I'll be glad to listen. But until that time, I'll stick with gold. Thank you.
Mm-hmm. Yeah, amen to that. So the importance of gold, insurance for your wealth. I wanted to get your take, if you have a take, on the platinum group metals. I mean, they've been getting slaughtered. I had some physical. I sold, some of it, most of it, because I just don't have a high conviction on it right now. But what's your take on the platinum group metals? Obviously, we have they're more industrial usage for not electric vehicles, but
Like
vehicles, combustion engines and such. And so, what's your take on the platinum group metals? I mean, it's cheap, so it seems like an opportunity, but I mean, for me, it's I think owning gold is more important for me right now.
Well, at the beginning of this year, I thought certain mining shares and exploration were cheap, and they got a whole lot cheaper, meaning I lost even more. So I don't follow the platinum group enough to be from a worthy conversation about it. I will say that not knowing the supply and demand scenario, there was a time when there was a one country that you always knew was a very good source of that, and that was South Africa. And that isn't the case anymore because of all the issues they're having there. But I don't follow it enough to give you a qualified answer. But I can tell you that I think people, and we're seeing more and more reports of this, that the politicians don't understand that if we continue to see this lack of real money going into mining and exploration, which has been happening for over a decade now, and they want to see all these things change in the next 10 and 15 years, electrification and all this other stuff, it's not going to happen, because there's just, you're not going to get, and I'm not the first person that said this, it's Michael Gentile that actually brought it to my attention. And that is, you're not going to get major mining companies spend a couple $1 billion to develop some copper project in the mountains in South America with copper at 350. That's just not going to do that. You're going to need a price, at least a couple dollars higher than that. And so the potential real shortages on metals is real. And we're not even talking about the critical minerals, where China basically has a grip on that and is slowly choking that grip. So there are a lot of issues. And so while I hear the don't worry, be happy crowd tell me about all these booming economies because of all electrification and everything, and I say to them, well, you don't even have certainty of metals to provide to bring all these things to fruition. And so that, I think, is going to be a bigger story in 2024. And I think it's going to come down to the common person. They're going to start to see how badly we're going to need metals. And that's where I think finally, please God, the metals kick in with the mining shares to a level that much more should be higher. I mean, we're looking at some of the majors selling at PEs of less than 10. When I was in the business, if there was a 25 PE, we thought that was low on a major mining company. So they've gotten very, very cheap. They could still maybe get a little cheaper towards year end, but I think I would focus more on base metals and precious metals than particularly platinum, but because also I don't really follow it good enough to give you a qualified answer.
Mm-hmm. Yeah, thanks for even sharing that. What's your take on silver right now? I mean, gold's back up near its all-time high. Silver's still 50% off its all-time high. It's like silver's like easy for me to stack, a lot, and you get these stackers, that stack massive amounts of silver. What's your take on silver?
See, you're a perfect example, and this is not in any way negative on you. You're my friend, and I enjoy speaking with you. But that's the example where retail, I've always argued for years, and why people used to get mad at me when I chose go over the silver is because people rather buy quantity than quality. In other words, they rather buy $1,000 worth of silver because it's, comes by coins versus a little $1,000 worth of gold. But the positive that I have for silver that I didn't have in previous cycles is because of its increased industrial demand and lessening excess supply that used to be out there, it is now to my point where if somebody said they're 50-50, I don't have a problem with that. Where I would have said years ago, I would have said maybe 75 gold, 25% silver. I do think, however, that we need gold to get through this 2050, 2085 area, 21 and change, and stay there for a couple of weeks. And I just think the momentum and flow will come in. And once that happens, silver will take over and could actually lead gold in a rally. But it's going to need gold to break out to really bring in people that aren't currently investors in it, which is 99.8% of all investors. I mean, I believe if we really went to 100 different brokerage firms and went through 100 different accounts, we wouldn't find 2 or 3 that have any measurable exposure to physical gold and silver. That's why that market could still go up so much higher if and when the momentum switches to it, which I think will occur if we go through those numbers that I spoke of.
Mm-hmm. Yeah, agreed. There's, for silver, like I sold a lot of it, and then I've been restacking, some of it, just more of the coins that sell easier, bullion and American Silver Eagles and such when premiums came down. But I've been having a higher conviction on gold, as of this year, and so I've been accumulating more of that rather than silver. But I still own some. What's your take on copper? I mean, copper, it's obviously an industrial metal right now. It seems like it's been getting killed. Do you have a conviction on that in the next, year or so?
Well, it's really been in a fairly long trading range now between 350 and 4. If it was a normal economic cycle, and I hate using the word if, okay? A lot of gals could not make comments on Wall Street if they can't use words like if, but, perhaps, maybe, on the other hand. So I don't like using them, especially if. But in old previous cycles, we always had an excess supply of copper. So as soon as the economy cooled, copper just fell because there was excess supply. That's not the case anymore. Now, there are some people talking about a possible small excess inventory for 2024. But at the same time, we're seeing some of the producers of majors amounts coming less in than they had predicted that they would have for 2023. And we're seeing hostility now just increase in many parts of the world. One of the reasons why I just focus in North America now. But the interesting thing about that copper argument is we go back to is, as much as it's being held back economically at the moment, the longer we held back and we don't make that investment that I spoke about earlier, the huger the move is going to be on the upside. So if you're short-term to intermediate, which in the old days meant months to years, but now it's days, weeks, or months, perhaps another 6 months, it stays sideways. But as we get into 2024 and as again, demand stays pretty good and a lot of new supply is not coming on, that's when I really think we're going to see it move very well. And what I find most interesting now, and when you talk to some of the royalty streamers and some of the majors, they're all that used to be pure gold companies are really now diversifying into copper, which is telling me that they recognize the coming shortage and the crisis that's going to be there. So, like I said, I guess my answer to you is, if you send me, Pete, what about copper between now and the end of the year? Probably going to be stuck 10 cents on either side where it is. How about in the spring? A little better. How about the next 1 to 3 years? Wow, going to be a lot of money made in that. So if your investment horizon is that long, and just so you know, when I started in the business, the average research report had a 3 to 5 year outlook. If you talk to people now, even when I sit with people planning about 3 to 5 years from now, something could double. Until most recently, they would go to you 3 to 5 years. I might wait 3 or 5 months, but we're going to go back. That's one of the other things people are going to have to get used to, in my opinion. Subpar performance for general stock markets. People are still living, my friend, just so you know, I see it all day. I have expectations of 10% or more that they're going to be able to make in investments so they can keep living the lifestyle or what they've borrowed against and said, oh, I'll take care of retirement 10 years from now. But no, unfortunately, as they see that even if we just go flat, that we don't lose, that's one less year of working to your, unfortunately, we're all going to pass. And then it becomes that much more you need to make in order to keep sustaining the lifestyle you're grown accustomed to. And that's where we get into my motto, which has been for half of my career. And I was just as bad as the other people in my first 20. And that is less is more. I think if people don't adopt that and they don't realize how dirty of a word, 4-letter word, debt is, there's going to be a lot of difficulties for a lot of people, unfortunately.
Mm-hmm. Yeah, and just to clarify on my comment earlier, when I said copper is being killed, it's this company I got that has been getting killed. So
I have one that's down 50% from where I bought it.
Yeah.
And if you would have asked me when I bought it or anywhere on the way down, I would have told you not going to happen. Too good of a story. And the story just keeps getting better. But we are in the worst mining share / junior resource market I've ever seen in 40 years. And can I just make one comment? It's not directed at anybody. You wouldn't know that if you listen to 95% of the commentators that are still out there that talk about those things. And I'm really saddened that they don't own up to basically how bad performance has been for them. And it's like, just hopefully people will forget. They don't forget. And the one thing, and I still get people that complain, that doesn't mean people complain, but I'm happy also that people say, Pete, at least you've been very objective and sharing about your losses and things of that nature, because there's been widespread loss. And listen, some of these companies ain't coming back, or they're not going to come back to the level some people are going to need, because financing has become extremely difficult in the junior resource market. And many of them are on fumes right now. So they're going to have to do what used to be done years ago, reverse split, roll back, start over kind of stuff and all. And that's not going to bode well for people that are down 80, 90% in that stock.
Yeah, I had a few people comment on my channel when I've had junior resource CEOs come on, and some people have not very happy. They bought when shares were a lot higher, and they're down significantly and have lost. One person said they lost a small fortune. I don't know what that number is, but
I don't have a problem with the CEO. Sorry to interrupt, but I don't have so much because it's their job. What I'm talking about, the newsletter writers, people that have these sites and all that, they talk as if there hasn't been anything close to a real bad market.
Yep.
And, some of them are very polished. Some of them can speak. They could sell snow to the Eskimos. But the bottom line is this has been the worst market. It's my big blemish. I mean, if I look at separate from that, I've done outstanding. But yet when I look at that, it's been horrific. And like I said, if you asked me 6 months ago or 25% higher, I would have told you we were at the bottom then. So, that's another lesson. Like you said, you only had 3 years, is markets and losses can go a lot lower than you could have ever first imagined. And when you don't prepare for them in any way, when you just buy the best case scenario and don't have a plan B, that's when it really gets tough.
Mm-hmm. Yeah, and your comments was clear earlier. I didn't think you were talking about the CEO, so I was just mentioning that some of the the YouTubers commented on those videos and said they were down significantly. And
listen, there are people. Listen, I see when I do some of them, and people say they'll either don't like the fact that I'm a charlatan because I bring my faith into it. He's a pumper and dumper. I was in a stock that was getting absolutely killed, and I'm watching these. And sometimes I think some of these people in the chat rooms, it's one person with 4 or 5 names or whatever the case may be, and saying I know personally that he's sold and I'm going, man, I wish I did, kind of stuff like that. But you have to take it for what it's worth. My argument always there is if somebody's spending that much time there and they're so smart, they could be doing a lot better for themselves and others versus just being in that chat room all day, doing all that stuff.
Yeah, agreed. And I just want to get your take on a couple other metals. Do you have any? I've seen like the lithium stocks get absolutely crushed. I don't know if that's something you have any
Yeah,
information
I'm
on.
actually, believe it or not, I didn't partake at all in the initial move up, but I'm eyeing one or two. They're very risky, but I'm eyeing them. I think, like I said, I think we're finally going to, when we get through this year, we're going to see the real shortages play a role, not only in the physical of these metals, but see the companies that finally that look for them, develop them, and bring them into production, get far more valued than they were valued this year.
Hmm. Yeah, yeah, that's good. That's good. And then uranium. We've seen it run up. It's cooled off a little bit, but it seems like
But
the
that correction's over now. That was so healthy to have that, because a month or so ago we started seeing all the rocket ships on Twitter. These things are going, and now we're at 74, 75, and it got quiet, and hopefully we'll get to 85, and then the rocket ships will go up again and go. But that is the single best supply demand scenario I've ever seen in my 40 years in the business. Barring only two things, barring a nuclear accident of substance or a total implosion of the world as we know it, the uranium price can only go higher. Because the other things are failing now. All these big wind power turbines and all, they're having issues. People realizing that without nuclear energy, you cannot get anything remotely close to the electrification that we're going to need to do all the things that at least the governments claim that we're going to be doing in the next 10 to 20 years. So the uranium story, and the beauty about it, and that's why I still say Cameco is an absolute core holding and all, you can count on your hands the producers. And a few of them in places of the world that I don't want to be involved in them. So it's not like any other metal where there's 2, 3, 400 public companies that develop something or build computers. Here's you won't even probably need two hands to count all the public companies that are producers that look for and develop and produce uranium. And that's why that market to me can only go higher.
Mm-hmm. Yeah, yeah, agreed. I'm long uranium. So any words, just I mean, we've have a lot of geopolitical issues. I mean, we have people, that are like weighed down with debt. We have, politicians that people don't have confidence in. There's a long list of issues that are happening in the world, and obviously we're here talking about finance, but what words of wisdom or encouragement would you give people that watch this interview?
Well, to the interviewer, I'm singing to the choir when I say this, but hopefully to some that may not be. I believe that the book of the manual of life is the Holy Bible. I operate on that. I believe there and only there, not in my book or anybody else's book, will you find the needs and the teachings in order to survive and hopefully prosper in a world that's come very full of darkness. And I also believe that the author or authors, depending on what faith you have and how you look at it, talked more about matters of finance than they did about heaven or hell, which is the ultimate destination point based on that book, one or the other. And if they thought that was that much important, then it's something to worth look at. And when things start to get pretty bad, people do call on that may not even be, they may be agnostic, and now, half the population now is agnostic or atheist. But God needs to be more than a 911 God. He's got to be your 24/7. And once you do that, and you normally have to go through, like I did, some really tough times, realize that through all your own power, it's not going to work. And hopefully people don't have to get to that level. But I really think, I'll just say this to you, I would find it very hard without my faith to get up tomorrow.
Mm-hmm.
Because like you said, what we're facing now and seeing and what's happening all around us from down the street to around the world, without faith or belief that something is even more important than this, I could see people saying, life is not worth living. But I think it is. And I think once we recognize that, and as fellow Christians, recognizing what someone did a couple thousand years ago, and believing in that is really far more important than anything you and I could discuss about any market or anything.
Yeah. Yeah. Thank you. Thanks for sharing that. Living life with purpose and knowing that there's something greater than yourself that you can have a relationship with, and we believe that's God. And so, what's that football behind you? I was wondering who is that signed by? I just see it.
All right, that one is Jesse Armstead. Jesse is now, he's been like an assistant general manager for the Giants. I worked for 13 years in Christian sports ministry, so I did Bible study and chapel with the Giants and the New York Yankees. And I actually formed a Christian financial company back in 2000 with a former New York Giant football player. And I was a diehard Jet fan. And just so you know, you'd appreciate that his name was Lee Russon. He was a running back on the first two Giants. When he proposed us joining together, and he told me who he was, and he learned a little bit about my background at that point, I said to him, God couldn't have possibly sent you for us to work together, because I used to root for you to drop the ball and die. That's just so you know, in 2020, with everything that was happening with social and wokeness and all that, plus the COVID, I just stopped working with athletes. Another reason was I also became too old. I was basically at a grandfather stage to these young men. And that's and we had our little Super Bowl here yesterday. The Jets played the Giants. That's a big thing for New York and New Jersey. And it was the worst football game I watched in 30 years. And I don't really watch it anymore, but I was at a party thing. It was the worst game I ever seen played in 20 or 30 years. So I'm glad I'm kind of out of it.
Yeah, yeah. Thanks for sharing that. Get to know a little more about Peter.
Hockey. You can still get me in hockey. Even Seattle has hockey now.
Yep, Kraken. I think it's the Kraken. I haven't been to a game yet, but someday.
You have to go to hockey. You cannot appreciate hockey unless you go to a game. It's a game that must be seen live.
Okay, gotcha. I'll be sure to keep that in mind. Well, thanks, Peter, for coming on, and appreciate you and your time, wisdom.
Well, you know that, brother. I really enjoy speaking with you both on and off the air, and I've just noticed in the short time that we've been talking how much more sophisticated you're coming and understanding it. So you're going to be somebody, I think, that can help a lot of people for a lot of years. Please God.
Yeah, Lord willing. Thank you.